You guys are watching this video right now all over the world. You know what time it is. You guys are alive and blessed. Can't really complain. Welcome to Misunderstood and MYB Trading Course. In today's session, guys, we're gonna go over my favorite key concept. You guys hear me talk about this pretty much every video. It goes by liquidity. Liquidity, guys. It here's the course is officially here on what is liquidity. How do we identify liquidity? Why is liquidity important? And if you guys, at the end of the video, if you guys don't understand what is liquidity, then that means you guys are the liquidity, and it is be life. Someone has to lose and someone has to win in the trade. The more you lose, the more sellers in the market give more liquidity in the market. Liquidity have no really impact on retailer traders like us. Liquidity mainly for the high institutional traders because they are trading with a lot of money. They're trading with billions of dollars, millions of dollars, because for someone to be buying $1 million worth of share, someone have to be selling $1 million worth of share. Why retailers like us are trading with our little $100 contract, $200 contract, $500 contract. It have no pretty much impact on the market. So let's get right into it, guys. Right, mastering liquidity. What is liquidity? Let's start off with what is liquidity. Liquidity refers to which an asset can be bought or sold without causing a significant impact in price. Liquidity plays a crucial role, guys, in the market that determines the efficiency of price stability. Liquidity, guys, pretty much is just one candlestick, guys. One candlestick will have a wick on the bottom, will have a longer wick and a lower body. That's pretty much liquidity, guys. Everyone have their own perspective on liquidity, but when it comes down to it, liquidity is just one candlestick that will sweep at the demand zone or whatever you want to call it, guys. So why is liquidity important? Liquidity is important because it reduces slippage, ensure high spread, and a smooth order transaction. Liquidity will be pending orders waiting to jump in the market and pending orders waiting to be sold from the market. Identify market strength and affect market manipulation. Like smart money concept will be hunting. Love to kick you guys out the trade because, like I said earlier, it has to be a winner and it has to be a loser. Everyone who lose trade, those money pile up in a bundle and waiting to be sell into the market or buy into the market. So how do we identify the liquidity, guys? The first way to identify liquidity is always located above every swing high or every swing low. Then after we identify that, liquidity also will be found as above a supply zone or below a demand zone. And the key, this is how I make my profit and how I was able to become a successful trader. I trade the liquidity concept with a market shift. Because earlier in every video I told you guys, after every market shift, price is gonna always retrace back. So at this bottom or this top of the market shift, guys, price is gonna always reshape and form a V shape. The V shape is where you want to enter, because when you see that one candlestick have the long wick and the lower body, that's just where you enter the trade. So with that being said, guys, let's go to our first scenario of equal highs. Equal highs, also known as the bearish top, bearish double top. See how we have a shoulder here and a shoulder here? Above here we call liquidity. So what many traders will usually do, right, after price break off to form a higher high and a higher low. So what normally traders would do, you will come in for your short and you will put your stop loss above the previous double top, and you will come right here and you will get your short and you will short it down to the next demand zone. But see, even though, right, price is above here, how the liquidity will happen, the price will come right above here, right above and top here, and kick it. It will form one candlestick that will shoot up, bang, and then the selling pressure will come and dump that same candlestick and push it all the way back down. And then the previous candlestick after that will continue forming down. If the candlestick after the liquidity candlestick form an uptrend, that means that was not a liquidity sweep and prices continue to go up. So on the bearish, this is how we identify the liquidity sweep. It's going to be on top of a bearish double top. Vice versa now, on the uptrend for a bull market, it's going to be on the demand zone. So price was here, so this right here, guys, was a supply zone, and this was a demand zone. So vice versa, this became the demand zone, and price is like the double bottom. So now this become the double bottom. Price form up to form a lower low, lower high, lower low, and on the bottom there will be the liquidity sweep. So many traders will come into the market thinking it's a long, and enter the market here for the long and put their stop loss below the previous low, and price will go up. Price will go up in the direction, but the thing is, when liquidity came back down and sweep seed liquidity become below, anywhere above here is available liquidity. Price could come all the way down here, even kick me out of the trade, guys. Price could come all the way down there, kick my ass out of the trade, and still go back up. But the key component is liquidity is above every equal high and every equal low. You will find liquidity. So now we will move into a swing high scenario, a swing high and swing low. So previously I talked to you guys about the swing low. So when price started a uptrend, price went up to form a higher high, came back down to form a higher low. If this low was supposed to do its job, price would have continued coming back down before forming a what? A lower low and then lower high and continued going down. But price failed to continue to go down. So what it did, it had a market shift right here. So when the market shift, it came back down, and below every swing low is going to be liquidity, and below every swing high is going to be liquidity. So in this scenario, right, this the one is going to be a little tricky for you guys, because what normally a lot of retail traders do, even myself sometimes, I got caught sometimes doing it. What a lot of retailers would do, including myself, I'm still a retail trader, we would enter for the trade right here, right at below, and put our stop loss. We would put our stop loss below the liquidity, below the lower low, and then we want to take the profit, right? But notice what price did. Price came back down to this extreme demand zone right here, because this right here was the first demand zone, right? So what a lot of retail traders would do, they would enter the trade here and put their stop loss below the previous low, which is fine, but you gotta give it some breathing room, because liquidity is in the bottom, and you really never know how far down liquidity is gonna come and sweep that. So if it's a demand zone, make sure guys, you draw up your demand zone and the extreme. Make sure you cover every demand zone. And for the liquidity, it's gonna always be a V shape. The V shape is the key. So on the same vice versa, on the bearish market, price went up to form a higher high, higher low, continue to form a higher high. This became our extreme demand zone, because this was the higher high. Then price retraced to form a higher low. Then it went back up to, then see how price came back here to form a swing high. If this high was supposed to do its job and this V shape was going to do its job, price would mimic this previous high and break past it and continue to form higher highs. But what price did, price failed to, and came back down to have a market shift. See the market shift right here, price shift right here. And earlier I told you guys the market shift is the key. The market shift is the key to identify the liquidity sweep, to be honest with you. Market shift is the key, because guess what? Price is going to always retrace to the first demand zone first. So what a lot of retail traders will do, we will put our short right here for the pullback and our stop loss, because we so stingy with our stop loss. You guys got to expand the stop loss, man, and pull back. So this was the first demand zone right here, and this was the extreme. Price always, well, not always, because you can do whatever, but usually price will always come back to the extreme demand zone. So after that now, so after we identify our equal highs liquidity, we identify our swing high, swing low liquidity, and this would be the regular, everyone who started trading, the first thing you guys trade was supply and demand. This is the perfect way to scalping, because it's really efficient, because price is going to always respect a supply zone, a demand zone with some order blocks. So institution traders know this, guys. They know you guys are just trading. You guys don't really know that much, because on the forex market, when you guys place your orders on the chart, like when you guys put in your sell orders here, your take profit there on the forex on Meta 5 or Meta 4, institutional traders and the brokers know it's up. They could see where your guys' stop losses. The big banks have inside tradings and whatever, they have advantage over us. They can legitimately see where you guys have your stop loss. Like, it's there for the taking, for the big money, and the smart is there. So below every demand zone is gonna be liquidity. See how price came back here to form a higher high, higher low. See right here, oh, this is a smaller ship right here, guys. They look just at the bottom of the demand zone. Liquidity there and liquidity there. Vice versa, liquidity there at the support level and liquidity there at the support level, above the support level. So guys, pretty much how you guys really want to trade the liquidity, I use 2 time frame to identify the liquidity. Liquidity, you don't really trade liquidity, guys, right? Liquidity is not a cheat code or a key. Liquidity is the last confirmation you need to jump into the trade, right? Before you even understand liquidity, you guys need to understand order block, supply and demand, because prices will always mimic that. So let's draw an example now. So we move to the chart. So now we understand it. Before I delete this, let's go over this real quick. We have equal highs. Liquidity is going to always be at the resistance, support, and it's going to always be at the demand on the equal lows, right? Then we have the swing high, swing low. Liquidity is going to always be at the bottom of the swing lows or the top of the swing highs. And finally, we have the regular, you guys know it, supply zone, and we got the demand zone, right? So what we want to do now, guys, we want to come on the 15-minute chart, because all of this is all fun and game, but this is not the live chart. So you know me, we're gonna go on Bitcoin. Matter of fact, we're already on Bitcoin. So usually we use the 4-hour time frame, but for identifying liquidity specifically, we're just gonna use 2 time frame. The 15-minute time frame to always draw up your supply and demand zone, and then we're gonna use the 1 minute to enter, right? So let's get right into it. Like I said earlier, guys, liquidity is not just a trading activity. It's just an extra confirmation to let you guys know it's happening, right? So how do we really trade liquidity? First thing what we want to do is always hit your supply and demand, right? Our resistance is always going to be the highest, so we want to put our highest right there, right? So price came up to this demand supply zone right here, and then price came back down here where it started. All of this right here, guys, is liquidity, right? Remember I told you guys earlier, right? Liquidity is pretty much one candlestick, right? So how do you identify liquidity, right? First, you want to look for after you identify your resistance and your demand zone, you want to get the market shift, right, guys? The market shift is the key, right? The market shift is the key, right? You guys see how market shift right there? Bam, market shift right there. A market also shift here for a downtrend, because look at this, we have a higher high, price came back down to form a higher low, higher high, higher low, higher high, higher low, right? So guys, listen right here, this right here was the last higher low, right? And then price went up to form a higher high. So this right here will be our low right here, right? So guys, matter of fact, let's keep it right here, right? So you guys see this red candlestick right there where I draw it. So we can draw that for right now, right? So look here now. Let me zoom in to show you guys the liquidity right here. See how price came back down and it break the market structure now. So see how guys break the previous low and came back down. This candlestick right here, you see how price came back down, and if price was gonna cut this same red candlestick right here is where the liquidity happened, right? If this candlestick was gonna continue to be a downtrend, this candlestick here would have continued going down, and then the green candlestick right here would have continued going down. But sellers dumped it because people start taking profit and got scared, and sellers eventually start selling off their profit, right? So buyers came into the market and buy back all the shares, right? So after we identify is a wick on the bottom, guys, the wick is the key. So after you identify the wick, allow the wick, the candlestick after that must close on a bullish market. It must close above it. So you guys see how price closed above it right there, and then it formed a V shape. Like I said, guys, every break off structure is gonna lead to the liquidity. So how price came back there and it came back to where it started. So what you guys normally could have done, guys, right? You guys could have come right here, get your guys long on a bullish market, and put your stop loss right below the liquid, right below this candlestick right here, and you could give it some breathing room there, and you guys could simply ride this wave right here, guys. Simple as that. Just that is liquidity. We're gonna draw next one, because right now, same as here, the liquidity. If this right now price is about to retrace, because if this candlestick was supposed to do its job, price would have continued going down. But you guys see how price break it there, and this candlestick closed below it. So after we identify that, right, what we want to do now, go down to the 1 minute time frame, because if you want to be a swing trader, or whatever, or a 2 weeks trader, or however long you want to hold the contract, you could enter on the 15-minute time frame, and you could simply come right here, put your guys stop loss below, and below the top here, and you just want to ride this wave down to the next demand zone, which will be right here, where price actually made the breakout structure from, right below here, right? But usually, let's mark this off so you guys can see, right here, this green candlestick here, right? So now we identify that. Now what we want to do, move to the 1 minute time. Guys, I always tell you guys, the 1 minute time frame is the key. It's the key, guys, right? So see, it's just right there for you guys. I don't know how else to even say it, guys. The trade is right in front of your face. They just be calling you guys. I'm already in the trade on the 15-minute time frame, and it lined up perfectly with the 1 minute time frame. Because you guys see right here was a market shift, right? Guys, the market shift is the key. So you see how price retraced back here, guys? Guys, the trading, I really hope you guys are really picking up what I'm putting down, guys, because I'm putting down some financial freedom on you guys right now. I'm really changing your guys' life financially, guys. Price make the market shift. Like I said, guys, liquidity is not really a strategy to trade by itself. Liquidity involves supply and demand zone, the market structure. We have the order blocks, right? The liquidity is the final destination for the confirmation code, but it has to be, guys, it has to be in a V shape. So usually what we do right here, we would just leave this trade right here, and this would be a dagger, because normally this on a 1 minute time frame, this right here lead to the breakout structure. So eventually, guys, come on, guys. And just like that, guys, soon I will be on some live trade with you guys in the other session and other course. I will have the live session you guys could tap in. So with that being said, guys, I hope this liquidity concept find you guys very impactful and helpful. I really hope it do, guys. If not, so be it. It'll be live. Keep rewatch the video, learn it, and I will be dropping more liquidity videos. Like I said, liquidity is not a course by itself. Liquidity is a confirmation, and you guys don't want to be liquidity. You guys want to trade with the big banks and what? Make the smart money move. With that being said, guys, as always, stay blessed. And you know what I'm about to say next. Mind your business.